What is going on, investors? Hopefully, guys are doing well out there. Back here on the Investor Channel with Larry Benedict. He was on our channel maybe about a month ago. Just a veteran trader, worked at hedge funds, worked in the industry for a really long time. Larry, I know that you had a stretch in your career where you didn't have a losing year for, I think it was maybe over 2 decades. And that included obviously many, I'm sure it was a little more
Thank
stressful.
you.
It sounds easy on paper, right? And
It was
so
easy. It wasn't that easy.
sure, sure. And obviously, you had times where you had terrorist attacks, you had a great financial crisis, you had bubbles, inflate and deflate, and all those types of things. And that's kind of like what we're going to be talking about on today's show. Is we're going to be talking about kind of tactical events. And obviously, as we're recording this, a lot of things are going down in the Middle East, and you have conflict, and there's always some measure or some level of conflict there. But obviously, it was escalated over the past week or so, and it's moving markets up or down. And I wanted to bring you on from a trader's perspective. You've obviously seen a lot of these, and maybe just kind of start there. From a trader's perspective, where you're sitting. Obviously, on a normal day, these types of things don't factor into your mind, but obviously you wake up a week or two ago and there are these events that weren't on anybody's radar. How do you factor that in as a trader?
Well, it's a great question, but what I would say is I'm going to go back really far, and really my first foray into this global geopolitical risk type of stuff was back in the first Iraq war. Um, and I'll never forget it because there was not the kind of market we have now where you have point and click and you have 24-hour trading and all of that. But I'll never forget it. They bombed them, and the markets, there was no futures. You couldn't trade S&Ps overnight. It was a Sunday night. And the market was down a lot overseas. The Asian markets were down, etc. And we were short, the company I worked with, and we were literally on Sunday night, which you should never do in trading. We were celebrating. We were like, but we had no way to cover the position. And ironically, on Monday morning, the market opened down small and then exploded up because they realized that we basically had a one-day war and things cleared out. And that was my first event that was kind of like this in that sense, where at night, during the day, there's all kinds of movement off of potential airstrikes or ground attacks, etc. But fast forward to where we are now, in this particular situation. I think we're early days, unfortunately, into what we're going to see. And as a trader, I always want to let the market sort of dictate to me what's going to happen, what the move is going to be. And the one thing, that I would say is we're about a little over a week since the event happened in Israel, and the markets are up across the board, the equity markets. So I guess they're climbing the wall of worry. No one is that concerned, which makes me a little concerned because eventually, if something does break out, it it could be worse. But the one thing I would say to everyone out there as traders is you want to let the market sort of dictate to you what's going to happen. Listen, I have an opinion. I have a strong opinion of what I think the market's going to do. But a lot of times my opinion is dead wrong. And, my goal is to stay in business. So I let the market dictate to me. So I almost view it like it's kind of like any other day, but it's, in the midst of a geopolitical crisis. So, in oil, and also I would say there are great trades in here. Like there is a lot of volatility up and down, rumor mill, fake news, all of that stuff, which is great for traders, to enter and exit positions on exaggerated moves. So, I do think, it's an unfortunate thing. And, you always want to separate, the true event from trading. But at the end of the day, this is what we do for a living. So, you have to operate in this landscape. But, I think you'll see some really good opportunity in oil. I think you'll see a really, really good opportunity of trades in gold and, of course, the equity markets.
So you say let the market dictate. Obviously, we all see the price, and we'll see it on our computer screens or on TV or anything like that. What indicators are you looking at? And maybe you're just looking at price, but what indicators are you looking at to kind of dictate to you, if you will, like what the market is doing?
Well, I would say in times of war, or, we're not at war, but, other countries that are close to us and, affect us, um, you got to throw a lot of stuff out the window. Meaning, you know, let's say your mindset is, hey, you decide in the morning, I'm going to look at the foreign markets, I'm going to look at bonds, I'm going to look at price action in these particular equities. A lot of that gets thrown out the window because, the market is, not paying attention to that, and it's paying attention to something else. So, that in itself is basically what you know, what you've got to do. So what I do, and it's funny, today is Tuesday and the market opened down significantly and now is ripping up. And I don't know particularly why, but as a trader, I have to what they call respect the price action and make moves off the price action. Like the market is $50 off the low. On when I say the market, I'm talking S&P futures are like $50 off the low in 25 minutes. Listen, I might be bearish, but I've got to let, the market tell me what I have to do. So, that's a lot of, what you have to do in these times because, there could be rumors, and things could be thrown at the market. So, it's a good trading market. Be nimble and trade it.
Be nimble and trade it. And is that because there's, like you said, there's a lot of volatility? We open up down, and now we're 50 points higher in 30 minutes. Are those the markets? Like when we start to approach those types of markets, whether it's geopolitics or whether it's earnings or whatever is kind of moving the markets, like do you heighten your awareness at those times? Like, are you looking to put on more trades? Like, what's your mindset
I I That's a great question, and I would say that I would size my position smaller and make a
Mm,
lot more trades.
mm.
Take shorter profits, lock in shorter, time frame losses, and trade the market for what it's going to give you, because when you have a lot of volatility, it actually creates a lot of opportunity. So,
So as you're getting these opportunities, as the volatility is hitting, you're reducing. So let's say you're doing normally, 100 block trades. You're going to size that down a little bit, but you're maybe going to uh, do more trades. Are you tightening your profit and loss, or are you still looking for
no,
similar?
you don't really have to tighten your profit and loss, because the volatility in itself on a day over day basis is giving you the opportunity to take bigger profits if you want, and
Sure.
bigger, unfortunately, bigger losses, but utilize the same stops that you would if, in any general scenario. But what I would say to you, like looking at oil today, it was down last night. It was up a lot this morning. Then it went down right before we got on, and it was down about $1. And now it's down like 40 cents. So you could have had 5 really good trades in one day off of that price movement. And that's the beauty of what this is giving you. So I would suggest sizing down your position slightly, Okay. And then trading for a little bit more profit and maybe using a little bit wider stop than a tighter stop because you're trading less size and you have the ability to, what I call zig and zag inside the market.
So kind of playing the pops and the drops, if you will, of the volatility. And so you mentioned oil and gold specifically, obviously two commodities, I guess, if you will. Do you look in these markets where you have great volatility and a lot of fluctuation kind of up and down? Are you looking company specific, or are you do you stick to commodities, broader market stuff, or are you looking more for those finer opportunities? Like, I mean, I guess I could think of like defense stocks or something in moments like these. Those probably get a little more volatile to maybe the upside, and maybe other industries might move to the downside because of what's happening. Do you look for those opportunities, or is it kind of more of a commodity thing?
Well, I'm more macro in nature
Mm.
anyway. So when I say macro, I'm looking at the bond market, I'm looking at the currency market, I'm looking at the broad-based equity market, S&P 500, NASDAQ futures or QQQ or SPY. I'm also looking maybe sector related, like you said. I may say, hey, it might be a good time. These defense stocks, haven't performed the way they should, and maybe put a small position on there, but that wouldn't be a trade for me. That would be more of a hold. And I don't mean hold for like a month, hold for a day, 2 or 3, depending. But the stuff that I'm looking at and the stuff that I think traders really benefit from is the macro landscape. It's interesting. I have a conversation with a guy who is a really good trader. He only trades equities, and he trades equities that are not really big market cap stocks, not Apple, not Microsoft, but just like second and third tier names. And I'm like, I don't know how you do it, but that's his niche. So if your niche is in that world, yeah, then you could, what we call punt around, defense stocks on a day over day basis. But the moves are not going to be like what you see in this crazy market that we're in, you know.
Sure. And are you, I guess, would you recommend the people at home, you say reduce your size, maybe make more trades? I know that the person watching has been introduced to a lot of these leverage products. Maybe they're into options as well. Is that something that we, obviously with those products, you're taking on more risk and you have to manage that risk appropriately. In times of volatility, are those products more attractive or less attractive, I guess?
It would depend. Maybe more attractive in the landscape, but I think it's important for people to stick to their core niche, and a lot of times when you change up, especially in an uncertain time, it makes it very, very difficult to make money, you know. So for me, I just I go back to like when I started in the business, and really they didn't even I don't want to date myself, but it was the beginning of financial futures and people trading, different, commodity futures, etc. And what always got me was back in the 80s, the big bellwether stock was IBM. IBM was like how Apple is today. And as they called it Big Blue. As Big Blue moved, most of the time the market moved. Well, I said, you know what? I'm going to trade IBM because it's the purest play. And what got to me when I first started in the business was I'd come in long IBM stock, the market would be up, and IBM would be down. And I'm like, this is unbelievable because I can't control, like I had it right. The stock followed the market, but that's what makes it harder for me with individual, listen, with the whatever, the eight horsemen, they usually move with the market, the Apples, the Facebooks, the Amazons, the Googles, those, it's pretty pure, but there are days where you're going to be wrong, the wrong stock and not make money. So I like to play on pure, basically on the pure market. So for me, it's the easiest, when someone comes to you and they say, "Hey, is the market up or down?" You know, if it's up and you are in S&Ps, you made money most likely, if you were long. So
Sure. Is there any scenario where you move to the sidelines? So, for example, in the situation that we're in now, news flows a lot quicker these days. Obviously, 20 years ago, you didn't have social media or kind of real-time news. You might hear the president is about to speak at 6 p.m. and that's that was all you knew at the time, and you had to wait till 6 p.m. to hear what the president had to say. In situations like this, there obviously could be some telegraphing of some kind of news, whether it's Israel telegraphing what they might do on a certain day, or the United States coming out with a statement saying, we're gonna do this. Are you following the news to that granular level, or and if so, is there something that moves you? You're like, I don't know, this situation's crazy, I'm going to move to the sidelines, wait for this to kind of clear up and then get back to trading? Or are you really relying on the price action in your indicators, is kind of what I'm wondering.
I would say that for specific certain people, the sideline is not bad because they're not as nimble. But if you're nimble, and you're trading, to me, every day there's movement and price action. So I would say I'm pretty much on the sideline, and then I jump. It's like, putting your toe in the water. I put my toe in the water, then I pull it out and I'm out of the water. Then I'm in, I'm out. So I would say I'm pretty much sideline. Like, I don't have a huge bet on in the market that would last more than a few minutes, because, like you said, we could get news right now of something, and the crazy part about the news is it may not even be true. That's what's the
Yeah,
crazy,
right.
that's the crazy part. I'd love to meet the guys that start these rumors, but there's chat rooms out there everywhere that they're coming up with rumors every day of stuff going on. So to answer the question, I'm not heavily invested personally um, at this time because it's very risky, but to trade on a day-to-day basis, and I guess most of the people watching this will be doing that. You get in and out. So yes, there are times you're on the sideline. There might be 4 hours in a day where I'm like, listen, the president is meeting, the head of Israel at 2 o'clock. Who knows what's going to happen? I'm waiting it out. But then after the price starts to move, then I'm going to jump back in because I'm going to see the price action and I'm going to go, listen, this is kind of really bullish news, but the market's acting bad. So that would make me want to short. So really, price action is dictating to me, everything that's important, so, that's the best answer I could give you on that.
No, and that's great. And I know, Larry, we've got you during the trading day, and so it's kind of like it's like a sports better when sports are going on. You've got to watch this thing and you've got to keep your eye on it.
I have it in my hand.
It's awesome. So one last thing is, like, what I get from you is, and on YouTube, man, people kind of push these kind of like, they call them like YOLO, you only live once trades, where you're trying to like 100x your money and stuff like that. I think that's kind of foolish. Like, it seems to me you're just trying to consistently hit, to use a baseball reference, like just hit base hits, base hit, base hit, base hit, and constantly kind of build up your account and build up that. And so maybe you start with $1,000 and then you get to 10,000, you move to 100,000, to where those base hits start counting for even more than they did in the early days. Am I describing that right? Or
Great. You know what? I've actually used that analogy, and I've used
Mm,
other analogies like, building a snowman. Okay. Like
mm,
when you build a snowman, you have to build the base, and then, you put on all the different parts. That's what this is like. Like you had it perfect. You start, if your number is, you start with 1,000 or 10,000. Okay. You grind, grind, grind. You get your 10,000 to 20,000. Now you have the ability to take what I call a shot, but obviously a calculated shot, where you could take a $4,000 loss. Whereas when you started with 10,000, you could never take a
right.
$4,000 loss because you're wiping out 40% of your account. So, yes, that's how we've always built the P&L in any business that I've been in. It's just grind, 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 grind. We're 6 months into the year. We're like, holy cow, we're up a lot of money. Well, this looks really good to me. I'm taking a shot. I think this is a great outsized risk trade. And then I go and I'll make a bigger bet. And you know what? Listen, you never want to lose. You never want to see your P&L go down. No one ever does. But to get to that next level of trading, you need to basically have the ability to take those shots. Because guess what? So now my account's 10,000, it goes to 20. And I'm like, wow, this looks like a great trade. I'm going to let this thing go a little more. Okay. I'm willing to risk 5,000 because I'm still going to be up 5,000. And guess what? I make 15. Now I'm in a whole new ball game.
Mhm.
And now it just snowballs on itself. And that's the way, when people say to me, hey, what makes a great trader? Money management is the key to all trading, everything in trading. What I've seen, and I've managed hundreds of traders, which one day we'll get on on a podcast, and I'll tell you because I got the greatest stories ever on that.
Oh, okay.
But human nature and how people work. But
Mm,
that's the key. The greatest traders in the world are just unbelievable money managers. They know how to size positions when they're doing well. They're not the guy that says, "Oh my God, my account is $10,000. I'm down six. I'm taking the biggest position I ever had." That's a recipe to lose. But I'm saying, but these are, listen, they're easy to think about. They're hard to do. So, I would say that that's, what's important is just pure risk management and money management.
Yeah, easy to think about, hard to do. Well said. And I think thinking about it ahead of time, having a plan is probably one of the ways to make it a little less hard when you're in that moment and maybe your account's stuck a little bit or you're up big and still remembering kind of that money management as you described.
Oh, you can listen, you can never honestly forget that. I mean, if you forget
Mm,
that, that's going to be a big problem. So,
mm.
listen, a lot, they're very, listen, I'm guilty of it as probably every trader is. It's kind of like what do they call going on tilt? Like you don't ever want to
Yeah,
go on tilt.
yeah, yeah.
Listen, I've taken computers. I don't do it anymore, but I've taken computers and thrown them across the room. But that is a place that you're not trading at your best when stuff like that is going on. So, it's important to, have risk management, and then to get to the next level, you need money management.
It's well said. And Larry, people can find you at larrytrading.com. I actually get all of your alerts and I read them and I think they're fantastic. They're very easy to understand and you keep people very much updated. And I know you've got multiple services at multiple different price points. Again, that's at larrytrading.com. Larry, thanks for coming on the show today. I know we're in the midst of a trading day
Oh
and
yeah.
it's
No,
a
it's
good
no
one.
problem. I really enjoy it anytime, and I hope I'm helping people out there understand the market.
Absolutely. Thank you for coming on today, Larry. We'll have you on again soon.
All right. Thanks.
Thank you.